Good morning, traders and investors. Welcome to today's morning market call. So, what do we have today? Number one, geopolitical tensions between Iran and Israel is, and also we have central bank decisions in focus. The other thing that we have is in the US stock market, there's a relief rally as oil prices retreat. And also in the forex market, there's a central bank divergence and a weaker dollar. And lastly, in gold, there's a safe haven demand which is softening and underlying support still remains intact in gold. So to begin with, geopolitical tensions between Iran and Israel is, and central bank decisions is still in focus. So we have seen Israel and Iran coming to a slight form of wanting to negotiate. And because of that, we have seen that relief being shown in the stock market. And coming to US 500, we saw this relief being printed. We saw that sign of relief by that print up from the US 500 reacting from our support zone at the 5979.04. And yesterday we had talked about if we get this form of close above the 5979.04, we are likely to go back to our psychological level at the 6036.00. Why is 6036.00 an important level? Because this is a round number where traders and investors have keen interest on. And this at this 60.36, we saw that we've been having some form of consolidation, and we are in a we've tested this zone more than 5 times. So if you're going to have a breakout from this zone, we have to have volume confirmation and momentum candles showing that buyers are stepping in. And the question is US 500 going to take the all-time highs? You can comment or you can type on the chat. Is US 500 going to target the all-time highs at the 61.35? Yes. The same also has been happening also on the US 100, where we have been testing our 2046.88 level once, and we are coming off. Yesterday we bounced off from our support zone at the 2156.7.32. If you're in a daily morning market call and you always catch this form of buys that we talk about, congratulations, because I understand right now if you have been attending our morning market call since the beginning of this year, you understand that fundamentals is the backbone to your trades. Because if I know what fundamentals are speaking, I'm able to figure out what is the overall trend of the economy. Then technicals are places where prices are reacting to, and then I can position myself based on how we reacted the previous time when we came there. So right now I can see we came off from our support zone where previously it was a resistance zone where we touched more than 3 times. 1, 2, 3. Then we had that form of spike, then we came back down to it. And then we shifted upwards. Now this resistance stands support. And we moved up, then we had that form of pullback. Another question is US 100 also in this going to continue with the uptrend after the ongoing relief from the Iran and Israel global tension? On the Euro USD, before I move on to the Euro USD, so at the moment, market participants are now turning their attention to the Federal Reserve's upcoming monetary policy meeting. The first one is tomorrow we have the interest rate decision expected to happen. And we know that how this is important because we received some soft inflation numbers last week. And because of those soft inflation numbers, we understand that when you have low inflation, there's a possibility of interest rates to be cut. Why? Because low inflation means that there's less money flowing in the economy. And if you have less money flowing in the economy, it's a negative impact to the economy. So the decision is to cut interest rates so that people can be able to borrow money at a lower interest, and that will enable money to start flowing in the economy easily. So the question is, you have seen the the Federal Reserves, they have been really being persistent in not wanting to cut the interest rates. Why is this so? Because they believe that the overall health of the economy is good. But Donald Trump has been putting pressure to Jerome Powell. In fact, he even called Jerome Powell a knapsack. So we understand the pressure that is going on the Federal Reserves, and also we saw some backing from the CPI that truly they require to cut the interest rates. So tomorrow another question is Jerome Powell going to succumb to the pressure that Donald Trump is giving him? We will see that tomorrow. And on today's economical calendar, we all know that we have the best economical calendar here at HFM. So when you go to hfm.com, you're able to come to hfm.com, come to tools and education, then come to economical calendar, where you'll be able to see the news release that is being expected. So today, on the news release, we are expecting to see retail sales and industrial production, which will be closely watched for further indication of the health of the US economy. So, and you can see truly it's a high impact news being noted by this red bar. So, we are expecting a 0.7 monthly retail sales release, but this is the expectation. So if we get a better than expected expectation, that will be bullish for the USD. If we get a negative report that is worse than they expected, sorry about that, we're going to get bearish on the USD. So this is what we are watching. This is what you are watching on today. Sorry about that. This is what we are watching on today. And in the forex market, there's a central bank divergence and also an overall weaker dollar. So yes, we're going to look at that and see what is going to happen. Lastly, before I move on to lastly, we're going to look at the key levels that we'll be looking at today on our charts. And to begin with, we have this support zone which is still running at the 1.14886, unless we get a continuation to break the highs that we created here. This will be a good zone to be targeting up for a pullback and continue with buys. Overall, the Euro USD has been showing some bullish momentum overall, as also the USD economy has been showing the bearish momentum. And we understand in Euro USD, if the USD is showing weakness, Euro will show signs of strength. Also coming on to JPP USD, we've been seeing it consolidating around the 1.35690. Yesterday we had some form of uncertainty being printed at that level. So we still have some uncertain concerns of the overall trend of the JPP USD. But today, when you're going to get that form of news, the retail sales news, it might give us a clear direction on where we might go on JPP USD. Remember, if USD is gaining strength, JPP will lose. If USD is losing strength, JPP will gain. So today and tomorrow we have major news, and we're going to look on that. On the USD JPY, something interesting happened today. We all understand that in the Japanese economy, they have something known as they have the lowest interest rate in any form of country. Because previously it was 0% interest rates. Imagine you borrowing money from the Japanese and then you are not paying it back with interest. It's 0% interest. And this is what, if you're a trader and you've been a trader for a long time, you understand what carry trading is. People will go to the Japanese economy, take money, they borrow money because they understand there is 0% interest rates. Then they take that money to a well-performing country that has higher interest rates. For example, you can take it maybe to the USD and invest it in the stock market. Then, when you're taking it back, since it has gained interest, you're going to pay back the money that you borrowed and remain with your interests. That is what is known as carry trading. But recently, what has happened is the Japanese economy increased their interest rates to 0.5. So, when we saw that happening, when the investors and traders were now shifting their sentiment on whether to focus on the Japanese economy, but still 0.5 is very low. So previously we had a 0.5% reading coming on to still our economical calendar. So you can see on our best economical calendar here at HFM, you can see previously we had a 0.5% reading. The estimation, previously we had a 0.5, the estimation was 0.5, and then the actual is 0.5. So you can see they have maintained interest rates, which means if you're looking at the JPY index, we have a form of hold, which we might have a range on the JPY index showing that we do not have an up move or a down move because of the hold on interest rates. Then coming on to the charts on the USD JPY, you can see we're having that form of range. We are ranging from two levels, from the 145.215, then touching also the bottom part, where we've been ranging from also 142.492. Remember, this is a daily chart, so when you're moving on to a lower time frame, this might seem like a trend, either an uptrend, downtrend, but overall we have been in a range between these 2 points. And also on our middle point, we are slightly above the 144.120. I'll be focusing on the 145 to 15 to see if you're going to get a rejection from that level or going to get an acceptance. An acceptance is having a big bullish momentum with volume confirming. Why volume? Because volume will always confirm to us that all time frame traders, from the 1 minute all the way to the daily, all the way to the also the position traders, are positioning themselves for a buy position. And if they're all positioning themselves for a buy position, I should expect some strong bullish momentum to break this form of resistance which we have been having at this level. We've been seeing you've been coming to this level, then seller step in. Coming on to this level, then seller step in. If you're going to continue with this momentum, I have to see. If you're going to change the momentum, I have to see buyers stepping in strongly at this level. But I can see the overall trend of the daily chart of the USD JPY is a bearish trend. Then, lastly, I'm going to move on to our safe haven, which is gold. Gold has been pretty interesting, and you all understand if you're a gold trader, the overall trend of gold will always be buy. You can see from 2023 all the way to 2025, the overall trend of gold has always been a buy with these light pullbacks. Of course, there has to be some form of pullbacks too, as a sign of relief to show us, as a sign of relief. But the overall trend from 2023, even all the way from 2022 October, we can see the overall trend of gold has been pretty bullish. Then coming on today, we've been seeing some form of range. We had some downtrend that came in, then some form of this downtrend was a pullback, because you can see the overall trend was a pullback from, let me mark, from 2977.54 all the way to 34.30. So we had that form of large move. So this was only a sign of relief. So the overall trend of gold will still remain bullish, but at the moment you can see, now coming on to our micro levels, you can see yesterday we had that form of bearish movement, and when we move to a daily chart, it will show it's a bearish trend. So this bearish movement was because of the relief of geopolitical tensions. Remember, when you have any form of fear and uncertainty coming in the market, we are going to have traders and investors shifting to a safe haven demand, which is gold. And because yesterday when Israel and Iran were trying to negotiate and come on to an agreement, we saw that there was a form of tension relief, and that tension relief brought in some negativity on gold, because there's a less of safe haven demand at the moment. So we saw that bearish movement in gold. but the overall trend for gold will still remain bullish. And the question is, are we going to target gold to reach 5,000? So that's a good question to think on, and you can type on the chat, or also you can comment. And yes, so that's it. We have talked about our dollar, our stocks, our gold, and also lastly, let me look at oil. On oil, you can see when the geopolitical tension came in, we saw that large form of spike. Because when you have that form of geopolitical tension, the demand for oil rises, and we saw oil rise. Then when the relief came in, we saw oil spike down. But overall, the demand for oil it's stepping in, and a pullback all the way to the 65.22 will be a good level to take a buy position. But remember, from every form of break, we wait for a retest, then continuation. That's our play. We do not jump impulsively on a trade. And that's what makes you a good trader. You're disciplined, you expect for the move to come to where you expect it, then you execute it like a sniper. So with that said, thank you for joining in to today's morning market call. I'm sure you have gained some form of information and knowledge that you may have not had. And we are going to continue to improve this daily morning market call. Invite your friends. Come also for our classes. We are going to speak more. We have our classes mainly on fundamentals. We also have our classes that touches also on technicals. So today on our classes we'll be doing terminologies. Then tomorrow we'll be doing fundamentals. Then on the last day we'll be doing technicals and risk management. Hopefully I'm going to see you there, and you're going to have some good time. With that said, goodbye. My name is Shen Mungangi, the best market analyst here at HFM. Goodbye, and see you tomorrow, same time, same place. Goodbye.